Ghanaian Stock Exchange recorded over 30% growth in Q1 2025, outperforming other West African markets. Managing Director Abena Amoah credited the surge to renewed investor confidence and strong market activity. As of May 18th, the financial stock index also rose by 33%, while fixed income market volume jumped 53% to 87 billion Ghanaian cedis. Market capitalization hit over 143 billion Ghanaian cedis, a 70% rise year on year. Patrick Abankwa, financial analyst and investment advisor, joins us now for this conversation. It's a pleasure to have you in, Patrick.
It's a pleasure having me on your show, and thank you very much. Good morning from Ghana.
Yes, good morning. Great to have you in all the way from Ghana. Ghana seems to be having it good. Its currency named the best performing currency by Bloomberg in April, and now the stock exchange is seeing tremendous growth, the best performing in West Africa for the first quarter of 2025. What are the factors driving this impressive performance?
Thank you very much. I think that we need to put the growth in perspective, and I'm happy that you've asked for the factors that have caused this particular growth in the stock market. So first of all, we need to understand that the economy has shown signs of recovery, which has significantly boosted some investor confidence in the country. And this is evidence in the trading activities that we have seen on the equity market. Secondly, I think there's also a shift in investor strategy towards quality stocks, which has strong fundamentals, particularly in sectors like the financial sector, telecommunication network, energy sector, and the consumer goods, where we have seen a sharp increase in the value of shares that have been traded. And even when there's a drop in volume, there's an indication that investors are moving towards higher price, fundamentally sound equities. The last point I would think has impacted this particular side of the economy when it comes to investment has to do with government's aggressive stance on treasury bills. As we speak, government has been able to reduce the 91-day treasury bill from around 28% somewhere in February to around 14% now. And that means that they are rejecting higher interest rates. And that has pushed some investors to seek for alternative investment options. And that's where the stock market has seen some significant rise. And they are the major beneficiary of this particular switch in investment strategy.
Definitely intentional steps taken there to get the currency and the stock exchange where it is. But Ghana, Nigeria, there's always that competition and comparison, especially with Jollof. But now with the stock exchange and the performance, how does it compare to other West African exchanges, and what does this mean for regional investors?
Okay, so I think that clearly you can see that the Ghana Stock Exchange has emerged as the best performing securities market in West Africa, especially the sub-region, with an index growth of about 30%, as we said. This significant growth outpaces our neighbors like Nigeria, as you rightly said. I think for regional investors, this means that Ghana presents a compelling opportunity for higher returns and an ability to diversify your investment portfolio. It also signals a beacon of resilience and opportunity in the region, which still navigates through its economic challenges that we saw in 2022. I think that the robust investor interest and market activity in Ghana can potentially attract capital inflows from other West African countries and their markets, which are looking for better performance and better returns on their investments. So that's the danger that it poses to countries like Nigeria, countries like Cote d'Ivoire within the West African sub-region, where investors will now push their investment from these countries to Ghana because they are looking for better performance.
That's great news for investors, but let's see how it trickles down to supporting the domestic businesses and to access the capital and scale up operations. What role is the Ghana Stock Exchange playing in that regard?
So the stock exchange is playing, for me, a transformative role in supporting domestic businesses. I say this in the sense that it provides an accessible and affordable Ghanaian-backed source of capital that often comes at lower cost than the traditional financing route that we see from the investor banks. Companies are also able to tap into funds through their public listing, corporate bonds that they are able to offer on the stock market, and other instruments without diluting their values or overburdening their cash flow. if you look at the stock market, the Ghana Stock Exchange market, they have established what we call the tailored platform for small and medium enterprises, which we call the GAX, and that's making public listing more attainable for smaller businesses. Beyond the capital that we are talking about, listing on the stock market also improves your corporate governance structure. It offers some transparency for the businesses and then leads to higher accountability, which I think are critical for the sustainability of businesses. And as we can see here, that particular move by the stock exchange is attracting other new companies to be listed on the stock market. And as we rightly heard about a week or two ago, one of Ghana's top businesses, Casapreco, is making plans to be enlisted on the stock market. So that's the group that we are seeing for businesses within the stock market.
I mean, Ghana is really rubbing its in, shining with its stock exchange, with the currency. And aside from that, fixed income market as well has seen a lot of activity. It's up 53%. So what does this indicate about investor appetite as well? And as well, what can other partners, other countries, its brothers, learn from what Ghana is doing?
So the 53% increase that we have seen on the fixed income market, if you look at the volumes, we are looking around 86 billion Ghana cedis, and it's highly significant. It indicates a robust and diversifying investor appetite. While equity markets are booming, the strong performance of the fixed income market suggests that investors are also seeking for stability. They want stable investment. They want low risk avenues for their capital. And this is partly driven by moderation in the rates that government of Ghana is looking at when it comes to treasury bill yields, which has led to some investors to explore slightly higher yields like the fixed income instrument. And that also shows some kind of confidence, not just in the equities, but also in the broader financial market's ability to offer competitive returns across various risk profiles. That, I think, is the key initiative that we are seeing with the fixed income investment.
Let's see if Ghana keeps up this momentum and whether or not, the competitive African brothers catch up. But thank you very much, Patrick Abankwa, financial analyst and investment advisor, joining us from Ghana.